introduce the management of Tower Investment Manager Private Limited, which is the investment manager of the trust, on the dais. We have with us today Mr. Manish Satnaliwala, who is the CEO of the trust of the investment manager, and Mr. Amit Kumar, who is the CFO of the investment manager. It gives me great pleasure to introduce you to Capital Infra Trust, an infrastructure investment trust registered with SEBI on 7th March 2024 in accordance with SEBI Invit regulations and sponsored by Tower Construction Limited. Tower Construction is an infrastructure development and construction company in India with over 15 years of experience and is primarily engaged in the construction of road and highway projects across 19 states in India. GCL is also the project manager of the trust. Since 2008, Tower Construction has undertaken more than 100 road construction projects and has an established track record of efficient project management and execution involving trained and skilled manpower, efficient deployment of equipment, and an in-house integrated business model. The trust plans to acquire, manage, and invest in 9 operational and revenue-generating road projects. These projects are awarded by NHAI under the HAM model and cover a total of around 682 kilometers across 7 states: Haryana, Rajasthan, Bihar, Uttarakhand, Himachal Pradesh, Madhya Pradesh, and Karnataka. As on 30th September 2024, the average remaining concession period of the initial portfolio of assets is around 11.7 years. In addition to these 11, the initial portfolio of 9 assets, the sponsor also owns 17 additional HAM assets. The trust, through the investment manager, will also have the right to acquire new projects through the rights of first offer with our sponsor in accordance with the right of first offer agreement. The trust proposes to raise an amount of rupees 1,578 crores, comprising of a fresh issue of 1,077 crores and an offer for sale of 510 crores. The net proceeds of the fresh issue shall be utilized towards partial repayment of the existing debt. The trust proposes to open the bid offer on 7th January 2025 and the minimum bid lot size is 150 units and in multiples of 150 units each. The bid offer closes on 9th January for all bidders and the price band is fixed from 99 to 100 rupees per unit. We request your overwhelming support for this issue. I would now
Investment Trust, which is a road platform focused mainly on road and highways. So you can see that this is the Kiratpur New Chowk, which is one of our project, which is in Himachal. Nainital is in Nainital, Arnaul is in Haryana, and Sotipat is in Haryana. Just to give a glimpse of the pictures of our projects. The disclaimers. This is the structure overview of trust. Trust Invit is just like a mutual fund structure, right? Where you have a trust, the trust is managed by the investment manager, right? In this case, it is our investment manager. We are representing that part of it, right? Trust is a Capital Infra Trust, right? The trust will raise the money, right? Whatever the money comes through a fresh issue, right? That will be used for repaying the bank loans and partially the sponsor loans. And there is OFS also, where the money will be given to sponsor, which will be used for investing in other projects of the sponsor, so that it can come back to the Invit again. These are 9 projects which will be held by the trust, right? Trustee, access trustees are trustee basically. And once whatever cash is left after all the expenses, they will upstream the same to the trust, and trust will pay that to the unit holders. So there can be 2 components: return on capital and return of capital. So that's how the Invit structure works, right? And this is more like a AIF or a mutual fund structure. This is the summary proposed issue. Sanjay has already briefed you about. Will be listed BSC and NSC, right? The initial public offering is around 1077 crores for the fresh issue, and the OFS is 501 crore basically. The bid issue opening date is 7 January and closing is 9 January. The price band is 99 to 100 rupees and the multiple unit lot is 150 rupees. So it's basically 14,850 at the 99 rupees and 15,000 at 100 rupees. And the institutional portion is 75% and non-institutional, which includes the retail portion, is around 25% of the issue size. This is the sponsor overview. Gawat Construction is the sponsor, right? Gawat Construction has been to this business for last 15 years. They are present into around 19 states. They are mainly into EPC of road and construction part of it. They have diversified now into the metros also. They have taken up metro projects in Bombay, right? Their main clients include MOT, MMRDA, NHAI, and CPWD, right? And they will be the sponsor and the project manager for the Capital Infra Trust. So project manager is none other than a O&M contractor who will do the operation and maintenance of the project, right? Both major maintenance and the O&M part of it. This is the India map and this is how our roads are located, right? Spread across 7 states in India, which includes Himachal, Haryana, Rajasthan, Bangalore, right, and Nainital. The total portfolio is 9 hybrid assets, right? The counterparty is National Highway Authority of India. The total length is 682 kilometers and 2059 lane kilometers. The average bid cost is around 9,153 crores, and the total average receivable life which is left now is around 11.7 years. The initial portfolio assets includes the 7 assets. If you look at the bottom part of the table, right, we have received almost minimum 2 annuities in each of the project. The maximum annuity that we will receive is around 9. So there is a sufficient amount of residual annuity which is left, which is minimum average around 24 annuities which is there, because 15 years concession is there. 2 annuities comes every year, so that becomes 30 annuities. So maximum is in the Kathgodam and Nainital and Bangalore, where we have received 7 and 9 annuities, but rest of them are lower annuities, so the average residual life becomes 11.7 years. In terms of cooperative strength, I go by, there is a separate slide for each of the points, but just wanted to take you through that. Road and highways is an attractive industry sector with strong underlying fundamentals and government policies. The portfolios that we are bringing to the investors is actually stable revenue generating asset with there is no construction risk and there is a long-term cash flow. This is geographically spread assets over 7 states that we discussed about. It's a consistent track record of project management, operating and managing the projects for the last 15 years. With the growth opportunities to expand right on the ROFO part from the sponsor also and through third-party acquisition also. And this is a product which can be treated as a hedge against adverse interest rate movement. We'll cover in the next slides. And there is a skilled and experienced management team with industry experience, right? I've been in the industry for the last 5 or 6 years. Amit has come from Axis Bank. He has been into the InvIT space, right? And we have around 10 or more people who have relevant experience in the InvIT piece of it. So our focus is more on corporate governance and on the management team, which we'll cover the next slide. If we look at the industry about the MOT part of it, right? India is the second largest network in India, right? Today we talk about the InvIT, there are 26 InvITs, right? Out of which 11 InvITs are into the road sector itself, right? And will be the third InvIT will be on the public listed part of it, right? So there's a tremendous amount of growth potential in the road and highway sector, right? There are favorable government policies. The PPP framework has worked very well for it. India started with the EPC, then they moved to HAM and BOT, right? Annuity, and now they moved to BOT toll and TOT part of it, right? So we are more focused on the HAM assets at this point of time, and that's how it is there. The Bhagala Parijuna the scheme that the government has launched, right? It includes an aggregate investment. It includes an aggregate length of around 34,800 kilometers, right? With an investment of around 5.35 trillion rupees, right? And I think so. More in terms of the ratio, if you look at it, 45 to 50% will be the HAM, 20, 30, 40% will be the APC, and balance will be the BOT toll, right? So there is a significant amount of growth in next for the HAM piece of it. Of course, BOT toll is also going to be there, but I think the HAM is going to be there for next 10 to 15 years. In terms of the sizable portfolio that I spoke about, right? HAM assets, what benefit the being on table is there is no construction risk, right? It's a steady nature of income. There is no toll risk as such. Also, predictable cash flows are there, and it's a long-term concession agreement, right? So the average life was around 11.7 years, but if I take door to door, most of the assets are around 32.84, and just a couple of assets are around 11 years, so the average life comes to 11.7 years. But the long-term concession agreement is quite good. In terms of geographically diversified road asset, if you look at it, no single state contributes more than 31% of the revenue, basically. And the Haryana is there with 31%, but the rest of them is below 10%. And in terms of BPC, also the same situation is there. In Haryana itself, we have 3 roads, so that's why it's contributed 31% of it, right? There's 9 operational assets with around 17 ROFO assets, presents in 17 states, and average actual life is around 11.7 years.
Is the annuity to be received from the NHAI, interest on annuity, interest on the balance annuity, and the O&M grant which will be received from the NHAI. Taking all these 3 streams into the picture, cash flow which would be close to 610 crores to close to 670 crores, 680 crores in the next 3 years. Talking about the past financials, revenue from operations, as I already said that revenues are being booked at a cost plus margin basis. So you'll see the construction income, which is whatever cost have incurred on the construction plus the margin overhead has been booked as a revenue. 3 streams during the construction period, which any HAM project would have: the construction income, O&M income, and interest on the financial assets. Talking about the cash flow from operations, it was having all of these projects were under construction. That's why cash flow from operations was negative and was being supported through the equity contributions and the debt contributions. Starting March 24, on the console level, we have started generating cash, positive cash flows, and is continuing going forward. Talking about the cash in bank position, the company on the consolidated basis would had total cash balance of close to 337 crores, and if we talk about the borrowing side, it was close to 355 crores. This includes all the external borrowings as well as the USL support put up by the sponsor. That's all.